Hey, good morning, everyone. Welcome to the inaugural episode of Money Talks, brought to you by the awesome team at Abra. My name is Bill Barhydt. I'm the founder and CEO at Abra. For those of you who don't know me, I'll be your host for Money Talks going forward, and looking forward to also bringing you some awesome guests that we've been lining up and getting on boards for the coming weeks. So. A couple of housekeeping things. I've got the Q&A open on the live stream. I'll be looking at questions there. I've got some things I want to talk to you about. I'm already getting questions. I got some questions before the show, so we'll get to all of that. Let me just talk to you about our philosophy and the format for Money Talks. It's meant to be a no BS, simple but useful take on everything happening and things related to crypto, money, economy, and basically anything you want to talk about. We'll look at the key topics that we covered in the newsletter that we usually release on Wednesday and Thursday, answer questions you may have related to that, take a look at new features in the Abra app and questions you might have there. We've got a lot of stuff coming down the pipe the next few weeks, so we're excited about that, and we'll have more to say about that on the following week's episodes. So with that, let me get right into it. I've got my notes here. So we're going to take some questions in a second, and I want to talk a little bit about some world events. I don't want to spend too much time on it. I don't claim to be an expert at everything going on. I have my personal feelings, and I'm sure you all do as well. I'm hoping we can even use this as a little bit of an escape from all the craziness going on. But if you want to talk about it, please feel free to ask questions, and I'll do my best to answer. Okay? So we've got people joining from all over the world. I know that. We're going to start slow. We didn't really push the promotion for this week's episode. We're still working out the kinks on the format, the process. So we'll post the recording, and I suppose that will probably get even more views than the live stream, but we'll continue to accelerate the promotion for this in the coming weeks. But those of you joining us now for the first time as early viewers, you're really helping us work out the kinks in this, and send us some feedback. If you have any concerns, or if there's anything you think we should talk about that we're not talking about, then let us know. Somebody mentioned that there's a little bit of echo or feedback. I'm moving the microphone, so again, one of the kinks we're working out. Let me know if that's better. I'll lower the gain a little bit here, so we'll all figure it out together. Okay, hopefully that's better. So anyway, let me jump right into a couple of questions that we've had so far already. Let's see here. So, U.S. government has printed $3 trillion. Why hasn't that impacted the price of Bitcoin if it was designed to be a hedge against this scenario? Well, the government's printed a lot more than $3 trillion. If you look at all the quantitative easing going on, it's just basically been over and over again. Government basically printing to buy assets to drive up the value of assets and create a floor underneath the economy. Bitcoin was not necessarily designed to be a hedge against that scenario. Bitcoin was simply designed to be money without any trusted third party. And I use money in the very loose sense, right? It's really software. But Bitcoin's design was really meant to enable a peer-to-peer economy without any financial intermediary. And one of the design aspects of Bitcoin is that you can't artificially create more of it. Now, we can all decide later that we want to change the design of Bitcoin, but for now, that design is hardened into it, and it's going to be very unlikely that will be changed in the future. Now, as you've all heard me pontificate in the past, my perspective is that all governments' currencies eventually fail. The US dollar will eventually fail. There's no way that you can just create more and more and more of this paper at will and not pay a price for that at some point. Ask anybody over the age of 70 in Argentina what they think of government printed money, and eventually you'll see that it's very clear that anybody who's lived for this will see that all government backed money will eventually fail. The US dollar will probably fail last because of its status as a world reserve currency, which gives us more of a backstop in doing that. But, it's going to fail eventually. So my take is that when that happens, Bitcoin becomes a phenomenal hedge against that type of catastrophic failure. In the meantime, it's becoming a fantastic financial asset in its own right. And later, I want to talk to you a little bit about what's happening in this whole stock-to-flow research and Bitcoin's evolution, even from e-gold to a financial asset that was talked about in Plan B's latest research around stock-to-flow models. But again, I think in the short term, Bitcoin's a hedge against future catastrophic failures of currencies. But in the short term, I see it more as a financial asset in its own right, a la gold. And even gold, it's somewhat correlated to inflation, but it's also a supply and demand factor. And again, we'll get back to that when we talk about stock to flow. How do I see economic and fiscal recovery in relation to cryptocurrency adoption and growth? That is a fantastic question. The reality of Bitcoin right now, in particular, and altcoins to a large degree follow Bitcoin, with some exceptions. Right now, most people are using discretionary income to invest in Bitcoin. So it's very simple. The more discretionary income you feel you have, right, the more comfortable you are investing in something like Bitcoin. And that's just the reality of those markets. So in March, right, we saw that when the markets tanked in a way they hadn't before, all of a sudden Bitcoin tanked, and the markets became a little bit more correlated, very short term, to Bitcoin than we had ever seen before. And that correlation has more or less bifurcated because the markets were screaming higher, and Bitcoin's been more or less in a flat channel the last month or so. And I would say part of the reason for that is in general, again, Bitcoin tends to get more of the discretionary income that Western and more middle-class investors have. I think that will change over time as Bitcoin becomes more of an accepted asset class and becomes more of a standard part of people's portfolios, like in many countries, the way gold is a standard part of people's portfolios, which is one of the reasons why I think there's such huge upside in the opportunities for holding certain cryptocurrencies, Bitcoin, Ethereum, and maybe a couple of altcoins in particular. But you're going to see, I think, that correlation probably diminish over time to the large market swings. I still think for the next couple of years, if there's huge swings up or down in the market, we may see Bitcoin become short-term correlated to those swings. But over time, I think those correlations should disappear. Also related to this whole stock-to-flow model that I talked about before. Let me, since I've mentioned it twice now, let me talk about this idea of stock-to-flow. If you look at the newsletter, and I'll mention this as well, if you haven't subscribed to our newsletter, Abra users should get the newsletter automatically, but if you're not, just go to abra.com and scroll to the bottom of the page, and there's a little block there where it says you can subscribe to our newsletter, and just type in your email address. I cover all of these topics in way more depth than I can cover here, but one of the things I've been talking about lately is this whole idea of stock to flow. What is stock to flow? Stock to flow in very simple terms says how much of an asset do you have, and then how much more of that asset do you create? And that basically tells you what we call stock to flow. So I'll give you a very non-relevant but simple example. Let's say I make cupcakes, and I'm making one cupcake every minute, forever and ever and ever. Okay, well that would seem like at the beginning the cupcakes aren't that valuable because I'm creating them very rapidly. Okay, but after a year, if I have millions of cupcakes and I'm only creating one every minute, the rate at which I'm increasing the cupcakes actually goes down dramatically relative to the existing cupcakes. So now let's translate that into gold. There's a lot of gold out there, and the amount of gold that we create every year is more or less a fixed percentage of the gold in existence for whatever reason. Okay, we tend to increase the rate at which we create gold slightly, but more or less a couple of percentage points increase of the amount of gold gets created every year. So gold has a stock to flow ratio that's pretty high relative to other assets. which says that as an asset, its value should be pretty stable because most of the gold that we have has probably already been found, and so not a lot of new gold is being added relative to that. Now, Bitcoin, in theory, over time, should have what we call an infinite stock-to-flow ratio because as its total approaches 21 million, if you look at a chart of the amount of Bitcoin in existence, it goes up, 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 and then it starts to flatten out, let's say in 50, 75, 100 years as we approach 21 million. Now, what that means is that the stock will reach something close to 21 million, but the flow will actually approach zero. Well, as you know, if you divide something by zero or something close to zero, its value approaches infinity. So what that means is that in theory, the stock-to-flow ratio for Bitcoin should approach infinity over time, assuming we don't change the code for Bitcoin. Now, that's why, in theory, Bitcoin is the hardest money. You'll hear us use this phrase, Bitcoin is hard money. Well, the stock-to-flow ratio basically says that Bitcoin is the hardest money that we've ever had, and this is really a key proof point for that. A couple of questions before I get back to stock-to-flow about support. We have a fantastic support team at Abra. There's two ways to reach them very quickly. The first is support at abra.com, which is manned almost 24/7. We've got people in multiple countries and multiple time zones manning support at abra.com. So regardless of what time of day you contact support, you should get a response fairly quickly. And then the second, of course, is if you can't get a response there, but you should be able to get a response there, you can always go to the Twitter feed, Abra Support, and they'll DM you, send you a direct message as well. And one of the other questions was, I was curious as to how Bitcoin reached massive adoption when dollars, yen, euro, and yuan are reserve currencies. So the mass adoption of Bitcoin has very little to do with the status of other world currencies today, except to say I think there's going to be this growing perception that world currencies are going to start to fail in mass in a cascading effect sometime over the next several decades. I have no crystal ball. I have no idea when that's going to happen. But I can tell you that if history is any guide, it's going to happen. So it's less about what's going to happen today to those currencies in terms of why we should adopt Bitcoin. Bitcoin is simply going to be perceived as a hedge against catastrophic failure of the existing system, as well as being useful in its own right. Right now, it's being hoarded as kind of an e-gold or a digital gold, and that next phase in this whole stock-to-flow model predicts that Bitcoin will become a financial asset in its own right. Now, as a financial asset, what's going to happen is we have a banking system today which is based upon dollars. Okay, Fed prints money. It does overnight lending into the banking system. You have money markets, and there's a whole stack of services that make up the traditional banking world using traditional money. Those services are going to be replaced eventually using a cryptocurrency-based model. So it's going to be a parallel system for a while, probably 20, 30 years, and then eventually it's going to replace the existing system when honestly that system fails, right? And the fractional reserve system, like I said, been saying, eventually it has to fail. So we're going to be rebuilding a stack of new services. You're seeing the first generation of cryptocurrency lending, institutional lending using crypto, basically a whole suite of banking services that creates a whole new banking stack, but using cryptocurrency as the backbone, as opposed to the fiat model that we have in the traditional banking world. And we're in the first few innings of that game, and it's just really getting going, and it's super exciting to see. And so, yeah, we're really excited about that. And like I said, we're going to have some announcements in that area as well related to new services that are coming out with Abra. Let me see if we've got some more questions here. Yeah, so the echo is fixed. I'm glad to hear that. Let me see what other questions we might be getting. Can I read that support email again? Yes, it was support, S-U-P-P-O-R-T, at abra.com. And so please direct your support questions there, and the team is doing a fantastic job and is really happy to help. Let's go through the rest of the list. Oh, I'm supposed to talk about OXT and USDC, so let me mention that. So recently, we're always adding new currencies to the Abra app. I think we're up to something like 150, somewhere between 150 and 200. And we generally bifurcate them based upon where you live and certain legal issues where we might not be able to offer something in one country versus another. Our goal with Abra is to offer every cryptocurrency in every country, but we generally take what we want and we work backwards from there based upon what the lawyers and regulators are telling us. So this week, I'm really excited that we launched 2 new cryptocurrencies into the app. The first is available globally, and that's USDC, which is a dollar-based stablecoin, which was created by, I believe, Coinbase and Circle via a new conglomerate that they set up, and I think other companies are joining as well. But it's a dollar-based crypto stablecoin where the fiat is held in reserve by this new entity. And I believe it's a regulated money service business in the US and other places. And so you can deposit, withdraw, buy, trade USDC, as well as other stablecoins in the US and in the Abra app. We support TrueUSD, Tether, and Pax, and a couple of others, DAI. And so we also today launched OXT. OXT is the token behind the Orchid project. Orchid was founded by Steve Waterhouse and some other folks. Brilliant team, very interesting project. Orchid is basically trying to create a decentralized VPN system to enable secure, very private usage of the internet. Those of you who remember what we went through with the Arab Spring and other protests may know that the usage of services like Tor and other VPN technologies have exploded. Also, post revelations around U.S. government spying, usage of those services, particularly within this community, the crypto community, has also exploded. And Orchid is trying to basically take those centralized models for VPNs and as I understand it, create a decentralized model. And you actually buy bandwidth when you're using their service using this OXT token. So OXT token will be available starting today in the Abra app for non-US users, and we hope to bring OXT into the Abra app for US users very soon. But you'll be able to buy OXT with other cryptocurrencies or with your bank account or credit card in certain countries, and of course trade it against Bitcoin or any other cryptocurrencies in the Abra app. So congratulations to the Orchid team on their great progress, and I look forward to seeing what's next from their team. Let's see. So what is my perspective post Bitcoin halving with the difficulty rate? So let me explain what that means. As you know, Bitcoin is created at a very specific, predictable rate. Every few minutes, usually around 9 to 10 minutes, a new Bitcoin block is mined, which means that miners are basically trying to guess a certain number, and when they guess that number, they win Bitcoin and also earn Bitcoin by injecting a certain number of transactions into the Bitcoin blockchain. Now, when more miners come online very, very quickly, all of a sudden, that can actually drive up the hash rate or the rate at which these guesses are done, which means that blocks can actually be created too quickly. And if that happens, the Bitcoin network will actually make the game harder, which will slow down the creation of blocks to get it back to the same predictable rates that we were at before. Now, every few years, the amount of Bitcoin that you win when you create this new block is cut in half. And that happened a few weeks ago, and that's called a halving. And these halving events are kind of celebrated within the Bitcoin community and have become kind of also fun events. So when the halving happens, generally what happens is that it's less profitable in that moment to mine Bitcoin, right? Assuming that the price hasn't changed dramatically, because you're basically buying a whole bunch of electricity to mine, you're spending a whole bunch of money on hardware, but the amount of Bitcoin that you're winning as a miner goes down. So usually what happens is post-halving, the amount of computing power that is being used to mine Bitcoin falls significantly. And what that means is the rate at which new Bitcoin is mined will actually fall as well and start to become too slow. And then a few days later, there's what's called a difficulty adjustment. And that's this idea of making the game harder or easier. Well, in this case, they do the opposite. They make the game easier, right? So that the fewer miners that are out there, or the fewer computers that are mining, will have an easier time to mine Bitcoin, so that the rate gets back to the predictable rate that it was at before. And yesterday, the Bitcoin difficulty rate adjusted downward by about 10%. That may seem like a lot, but post-halvings, it seems to be a normal occurrence. The price of Bitcoin actually went up yesterday, so the network didn't really miss a beat on the halving and the difficulty rate adjustment. Now, what's interesting about that is if the difficulty rate falls, mining becomes profitable for the people who keep their mining equipment out there, which means that yet more miners will come online. This could end up creating a bit of a short squeeze, which I think could cause a short-term price spike in the price of Bitcoin. Hey, and just to be clear, we don't give financial advice here. The fact that I think the price of Bitcoin may go up or down at any given time is not relevant to anything except, that it's my opinion. And so please do your own homework. Yeah. So let's see. So that's the Bitcoin post-halving. Any predictions on BT price after 2025? Well, again, I wouldn't put much value on my personal predictions on price, except to say if you dig into that stock to flow model that this guy called Plan B created. I know he's a guy because I heard him on a podcast, but he's anonymous. I know he's an economist, but we actually don't know who he is, except to say I've heard him speak. He created this stock to flow concept that I talked about before. That stock to flow concept basically predicts a Bitcoin price of something close to $150,000 within like the next 18 months or something like that, which obviously only takes us out to 2022, and then I think it takes us up to like something close to $250,000, somewhere between 5 and 10 years out. So now, if you agree with the stock to flow model, you're probably buying as much Bitcoin as you can, because the upside is huge. Look, my take on models is every financial model is wrong, 100%. That's why they're called models and not facts. Now, the question becomes, how useful is that model? Now, unfortunately, we don't know how useful that model is, and we won't know until we see what happens. Does Bitcoin become a real financial asset, which is what Plan B predicts? Does its price go to 100,000, which is what Plan B predicts will happen over the next couple of years? If it does, obviously he's a genius, and his model, has been proven to be mostly correct. If it doesn't, probably throw it out, and somebody will come up with a new model. So my take is that his plan makes a lot of sense. It's a good, if you do a regression analysis on the past, it overlays with the price movements in the past incredibly well. But again, it's a model. So modeling the past is always infinitely easier than modeling the future, and time will tell. But so that's the best analysis I have seen so far, in my opinion, on what might happen with the price in the future. So we've got some Orchid supporters here. Thanks for that. I'm an Orchid supporter as well, so all good there. More questions on the price. So I'm gonna skip questions on the price for now. I think I've answered that. So question from Twitter. Can you tell us what's happening with Stellar post your announcement there? So let me talk about that. And there was also a question related to synthetics. So that's a very technical question. Let me address them both since they're somewhat related. The easier part of the question is that why Stellar and what are we doing with Stellar? So for those of you who aren't clear, Stellar is the foundation behind the creation of XLM or the Lumens software, which is a blockchain-based cryptocurrency project that allows you to very easily create new stablecoins and other crypto assets. And it's used behind a whole bunch of stablecoins in lots of different countries. We're huge fans of the team at Stellar. Jed is the CTO and founder of the project, was also at Ripple and was one of the ideas behind Ripple, and is just a genius, and I'm a big fan of his. And so, XLM is not meant to replace Bitcoin. It's meant to do other things. But what's really interesting about it, it's very, very scalable and does what it does really well. Anyway, so at Abra, we've been looking at scaling some of the solutions required for some of the products we haven't announced yet. And some of those things do involve stablecoins, I'll tell you that, but I can't get into why. And so in looking at this, it became very obvious to us that Stellar was a really interesting platform. And when we spoke to the Stellar team, we also found that our mission of democratizing access to financial services was very much aligned with Stellar's. And as a result of getting into our shared roadmaps in the coming months, they ended up making a small investment into Abra, which we're very excited about. And there are some very specific product plans, which I can't get into yet, but we'll be announcing later this year. And so the only reason, actually, to be honest, that we announced the Stellar investments sooner than the product announcement is that when Stellar makes an investment, it's public because they have wallets that show the amount of lumens that they're holding, and when those lumens value falls by a couple of $1 million, everybody wants to know where the money went. And so to basically create full disclosure, they announced that they made the investment into Abra, which we were very happy to help them with. In terms of synthetics, I don't want to lose everyone, so just to be clear, today when you use Abra, you're using a hosted, managed cryptocurrency wallet. We have different custody partners. Nothing's unhackable, but I would say Abra is as close to unhackable as you could possibly get without taking your key, writing it on a piece of paper, and putting it under your bed or in your brain. And so, which I don't recommend if you're storing like $1 million worth of Bitcoin, by the way. So, we've basically created a very hardened infrastructure at Abra that makes it super easy to manage, trade, buy, hold and send cryptocurrencies across lots of different users. And so we used to use this synthetic model for managing assets, which we don't use anymore. It was really helpful in getting us going quickly as a company, but we've moved on to our next generation architecture, which definitely allows us to scale better, service our customers better, and add more cryptocurrencies and new features very, very quickly. So I'll leave that at that. So I'm getting some questions about local bank support. This is an interesting question. This is something I spend a significant amount of time on every day. Those of you in the US, if you use Abra, you have it great. You can type in your bank login and password in a very secure environment. We don't even see it. It goes right to your bank, and you can basically ACH funds right into your Abra wallet, or you can wire money directly from your bank into your Abra wallet. And if you're outside the US, you can use your credit card to add funds into Abra, or if you're in the Philippines, for example, you can walk into a local retailer and deposit cash. We are looking to add local bank support all over the world. It's something that I'm actively working on. This is very hard. There's a lot of countries with a lot of different banking systems, and it takes a lot of time. But I can assure you it's way at the top of my list in terms of which countries we're going to support, which banking systems. But we tend to base those decisions based upon where our users are and the demand we're getting. Right, so if you ask the Digibyte community, for example, they were relentless in coming after us to get Digibyte support into the app, and eventually they got it. So I know that if we have users in a specific country that want local bank support, and they're just as relentless, eventually they're going to get it. But we're working on it. How do we determine, and by the way, a couple of people both in Reddit and Twitter have asked more about who I am and where I come from and how I got into this, and I'll talk about that in a minute, although I suppose most of you probably heard it at some point. But I did get a couple of questions on how we determine which crypto assets to add on Abra. And so this is a good question. It's a non-trivial discussion. So first we track hundreds of crypto assets. We look at everything from market capitalization to trading volume across different exchanges, price, spread, meaning if I want to buy and sell quickly for whatever reason, am I going to get screwed on the spread? Things like that. And then we look at legal analysis. Are these securities, or could they be deemed securities by US or other regulators? And we filter them for lots of different opportunities. Then we have to look at custody. Since we use third parties for managing custody, we're also subject to what they're willing to do. And so our custody provider must support the token that we want to add into the Abra app. So if all of that lines up, we generally add that token into the app, and like I said, we've added something like 150 to 200 total, and certain tokens are available in different countries. And this happens literally every single week at Abra. We're looking at new assets and new opportunities for increasing the footprint. And like I said, we're constantly getting requests for more tokens. So the echo is coming and going. I have no idea, why, but hopefully it's gone. All right. So what's the shortest time frame to deposit USD in the U.S.? Good question. So this is something that we've been actively working on, and so the answer is actually it should be 1 business day if you initiate your deposit during weekday business hours. And this is new. It used to be 5 days, and as of yesterday, it's actually now 1 day. And so that's a huge win for us that we've been able to, I use that product as well, so that I'm able to access those funds in 1 day. So let me just be clear and explain what that means. So if you use the Abra app and you choose, let's say, Bank of America or Wells Fargo or Capital One, as your bank or whatever your U.S. bank is, it'll ask you to type in your login and password to authenticate yourself to your bank. Again, Abra doesn't see those details. It just passes them through to the bank. You can then initiate a pull of funds into the Abra app through one of our bank partners, which will allow you to then have stable coins in your Abra app, which you can then use to buy Bitcoin or Ether or any of the other networking or any of the other cryptocurrencies we support in the Abra app. And the deposit time there should be 1 business day. Obviously, if you initiate the transfer on Saturday morning, you'll then get the funds on Monday, since ACH processing doesn't happen during the weekend. Sorry. So who am I? Sorry, I've been getting a bunch of these questions, and I assume that we've been around for about 5 years. So I realize we get lots of new users all the time, and people don't know who I am. So I've been around in the crypto and cryptocurrency space, and before that the payment space, and before that the internet space, going back almost 30 years now. Yeah, long time software guy, internet guy. Was working on kind of 1.0 internet projects for many years, early in my days at Netscape. After Netscape, I spent a lot of time working on next generation payment systems, particularly in developing markets, but also for games. Very strong interest in the gaming space, and a lot of what I learned about payments I learned in the gaming world, and have taken a lot of those learnings and then applied them to payments. But I also have a background in capital markets. I was at Goldman Sachs before I was an internet guy, and back when people were proud to say that they worked at Goldman Sachs and had it very high in their resume. Now people kind of say, I used to work at Goldman Sachs, like that. But actually, no, I learned a lot from Goldman. But I also learned that Wall Street analysts tend to be a trailing indicator on new trends, not a leading indicator. So that's, you didn't ask, but I'll share that with you. So when Goldman says they're not bearish on Bitcoin, I don't take that very seriously, because I know that they're going to be the last ones on board anyway. So I don't want to talk too much about my background. You can find me on Twitter and LinkedIn and all the great places. I've been around forever. I'm probably the old guy in the crypto world. Yeah. So interesting question. How do you think would be the best way to scale Bitcoin for mass use? I'm just reading it word for word. So, interesting question about scaling Bitcoin. One of the things I wanted to mention was, I'm just looking at my notes here. We had, hopefully you saw this, but if you didn't, go back to our blog page or newsletter and listen to the podcasts. The last 3 podcasts we did was a series of 3 podcasts with Saif Amus, who's the author of the Bitcoin Standard. I have the book right here. Bitcoin Standard, in my opinion, is the best book by far that I've come across that explains Bitcoin from a macroeconomic perspective, not just how Bitcoin works. I would say Andreas Antonopoulos is probably the best writer in terms of how Bitcoin works, but in terms of how Bitcoin fits in, this is it. Now, I had the pleasure of interviewing Saif for a couple of hours a few weeks ago. There was so much content that we had to break it down into multiple episodes. And each of the 3 episodes is basically, just binge-worthy in its own right. Please listen to it. But the reason I mention this is that he published an article today, and it literally came out a few hours ago, and I downloaded it. I haven't finished. I scanned it already, and I'm just opening it up really quickly here so I can give you a quick rundown of the contents. I scanned it quickly, but the article is a research bulletin follow-up to the book, which is the Bitcoin Standard as a scaling solution. So it's related to the question about scaling Bitcoin. He talks about the magnitude of the problem, how hard money cannot stay niche, which is obviously great news for us because the more Bitcoin widens its audience, so the bigger the tent becomes, the better for all of us early adopters. He addresses this whole Bitcoin block space supply issue and why Bitcoin cannot replace banks, how we get into second layer scaling solutions like Lightning, trade-offs and risks, and avoiding gold's fate, where gold basically was thrown out as the the reserve asset by governments. So I'm going to go through this. It's a 20-page research report. I'm going to go through it this weekend, and I'll write about it in next week's newsletter and give you my take. My guess is that given the huge following that Saif has, he's going to get a lot of response on this now that he's giving it away in his newsletter. And by the way, I think I may have said it just came out. It didn't just come out, but he's giving it wide adoption now via his new newsletter. So I haven't seen it before. I'm going to go through it. But it seems to be one of the better, based upon my initial read, one of the better perspectives on mapping Plan B's stock-to-flow model with the realities of how Bitcoin works and why it will scale. So we'll have some more thoughts on that soon. The title of the book was The Bitcoin Standard, and thoughts on XRP. So I don't have a lot of thoughts on XRP. I do track it. I know the team there reasonably well, great people. My take is right now is that Ripple itself is a bank software company, and XRP is kind of an optional component of that. Now, separate from their role as a bank software company, they're working very hard to drive adoption of XRP separately from what they're doing with banks for their Ripple gateways. And that's very interesting. I read yesterday that they've invested something like $500 million in companies like MoneyGram and other companies to drive XRP adoption. I know that our friends, and I know Daniel and the team at Bitso in Mexico quite well. They're awesome. They're using XRP for cross-border money transfer settlement. And I believe they're the only company combined with MoneyGram that is successfully doing this at large scale right now. And obviously, Ripple is highly incentivized to get others to use XRP for these types of settlement transactions. It's unclear to me why XRP is required in those transactions, outside of the fact, of course, that Ripple is investing very heavily in these companies to incentivize them to do that. But that may not matter. If these companies decide to use XRP and it scales and it works, great. I have not dug in too much on why it's happening, except to say that they're starting to get some initial traction, which is great. Thoughts on Digibyte and Digi assets. So I know a little bit about Digibyte, partially because the Digibyte community is so aggressive. in courting Abra constantly. Digibyte is a really interesting platform. Let me just comment on altcoins versus Bitcoin for a moment, because I get a lot of questions on this, and I've got some questions here. I think that if you look at Ether, for example, the rate of technology innovation in the Ethereum platform is way higher than Bitcoin. And I would actually claim that's a good thing, right? We need Bitcoin to be a hard, stable asset with a hardened network, very slow rate of change as a platform, very stable as a currency, very reliable. And so that begs the question, well, how do we get new technologies into Bitcoin if our goal is to make sure that it's very slow to change, very stable, a hardened network? Well, that's the power of having all these altcoins, is that you can basically take risks on new technologies, on new ways of looking at proof of work or proof of stake that Bitcoin simply can't do in the short term, given the other requirements of being hard money. And then it can pick and choose technologies. Litecoin has been great for this, right? I mean, Litecoin tends to adopt a lot of these new technologies much faster than Bitcoin, and then in some cases, Bitcoin will then later adopt these new technologies, and that's fantastic. We need that. We need that technology competition in order to push the Bitcoin markets forward as quickly as possible. And Digibyte has been one of those cases in point. And I'm really excited about what they're doing. They really push the envelope in terms of scalability, how they do proof of work, et cetera, et cetera. So I have no idea which of these altcoin projects may eventually break through. But what I do know is that effectively they're all acting as a test bed for next generation technologies that we need to some degree to make next generation projects like Bitcoin or Ethereum or yes, even Libra eventually come to fruition. Another question on deposits, just to reiterate, deposits have been changed in the Abra app as of this week. I'm talking about US dollar deposits via US banks, so that they should all be taking one business day during the week as of today. So if you were waiting 5 days before, the good news is that you should be seeing deposits in 1 day now. All right, let me see what other questions we have here. Right, so another question on Digibyte, speed and security. So yes, I just talked about that. I love the technology there. So if you haven't looked at the Digibyte project, check it out. You can trade and buy and invest in Digibyte in the Abra app. It's a very interesting project. Let's see, what else? Other questions. So how do I subscribe to the Abra newsletter? As I mentioned, just go to abra.com, scroll down to the bottom of the page, or better yet, download the Abra app and you'll automatically be subscribed. And hopefully everybody here has the Abra app. What is my opinion on the state of Bitcoin today? Well, look, so as I said, I'm not going to talk too much more about the price. I think if you look at stock to flow and Plan B and what Seif's writing about, I think you should be bullish on the market in general. Bitcoin's trading, what is it right now? 97.15 or 97.20, I think is where it's at. Which it's basically been flat for about 6 weeks, which means it's very stable. I mean, post halving it's stable, post difficulty adjustment it's stable. U.S. Economy moving around like crazy. The price is stable. Et cetera, and that's a good thing. I think we're in what I would call, in investment terms, an accumulation phase. An accumulation phase often precedes a huge spike in price, and I think that also maps, interestingly, very well to Plan B's hypothesis and thesis around the huge potential price movement in store for Bitcoin. Again, not financial advice. I'm not your financial advisor. I'm just giving you information. Please do your own homework and make your own decisions, but that's what I'm seeing right now. I think the technology roadmap for Bitcoin, while it's very conservative, is very realistic and very encouraging. I think the fact that layer 2, Lightning and other technologies are being managed separately from Bitcoin Core is exactly how it should be, and that if we want to eventually use Bitcoin as like a replacement for Venmo for small dollar transactions anywhere in the world, which is part of its original design, it's simply not going to scale for small dollar transactions P2P on chain. And so we need these technologies like Lightning to get us to that small dollar P2P promised land, so that when Bitcoin becomes that global financial asset, we can store money over here, but also move money around in small amounts over here using technologies like Lightning, which I'm very, very bullish on. So I think Bitcoin is moving in the right direction. There was another release of Bitcoin's core software this week. And for those of you who are paying attention, we've got now Bitcoin Cash, we've got Bitcoin SV. A lot of people are, very bearish on some of these forks of Bitcoin. Again, where I come out on that is I don't know if any of those projects are going to die, but I know that the more competing technologies we have doing their thing, the more likely we are to see better things happen with Bitcoin, with Ethereum. On the Ethereum front, this has really become the year of DeFi, and I'll have a lot more to say about the whole idea of DeFi in coming newsletters and also Money Talks episodes. I'm really excited about what I'm seeing here. We're starting to see a lot of interesting projects on the DeFi front, particularly in the areas of lending. If you haven't been paying attention to what's happening with DAI, it's really interesting. And so DeFi is to me the holy grail of Ethereum, because the idea is that I can actually create projects that don't have an off switch. So for example, the whole idea of having a DAI cryptocurrency is that there's no central repository of dollars like there is in theory with Tether or USDC or TrueUSD. I simply maintain collateral in the network itself, meaning I adjust the value of Ether or other assets that I'm holding to be equal in value to the amount of dollars that are out there via the stablecoin. It's a really interesting idea. It's an idea that didn't really even exist 10 years ago. And so this whole idea of a kind of synthetic derivative-based dollar that's completely decentralized is a very new concept. I'll warn you, it's not fully decentralized today. You can still shut off DAI. So this isn't a risk-free model. Obviously, and software can have bugs. So we're very early in the DeFi era, but I'm super bullish on the prospects, and we'll see how it evolves over time. So in that regards, I'm very bullish on Ethereum as a contract platform. I think that that's where probably the most rapid innovation is happening right now in the crypto space from my perspective. And we'll see how that continues to evolve over time. Getting a bunch more questions here. Let's see. Let's see if I can. Yes. What is my take on the jobs numbers that came out today? Yeah, this is interesting. I don't know if you saw this, but the U.S. Government released its jobs reports a couple of hours ago, and I think it said we created something like 2 or 3 million net new jobs in May, which is shockingly high. It's almost to the point where I don't believe it, but I'm going to take it at face value that the numbers are accurate. But President Trump was out there touting the jobs numbers, of course, as he normally would, within minutes, and the stock market roared higher. I think at one point the Dow was up 1,000 points today. So clearly a lot of people believe that we're in for a V-shaped recovery, as opposed to this long prolongated U kind of recovery in terms of jobs and spending and GDP growth. The jury's still out, in my opinion. I'm a little skeptical that we can come back that quickly, but we will see. So I just don't know. But, we'll see. Clearly today's report says V is looking more and more likely. Now, let's be honest. I mean, we don't have a cure for COVID. We've got huge protests going on, all understandable. The second wave has not really hit yet. We're seeing signs in Los Angeles and other places that the second wave could be worse than the first wave. The protests, while I agree with what they're protesting for, are not helping in terms of managing the second wave. Not to say they shouldn't protest, but realistically, they're not helping. And so we just don't know. I hope that as we open up, this becomes a big nothing burger, and we can all go about our lives, and people who have pre-existing conditions and the older population can simply stay more quarantined, and everything will be fine. I hope that happens, but for me personally, that's a hope, not necessarily a belief, and because we just don't know. Like I said, I'm hoping for the best right now, and the fact that we did see so many net new jobs is particularly interesting, and also somewhat surprising. Okay, so let me see what other questions we've got here. Thank you for doing this. You're very welcome. How do I see ETH or ETH expanding beyond DeFi? That is a very good question. I think the two best applications that I've seen, the three best applications I've seen for Ethereum so far are stablecoins, certain types of NFT/security issuance, and DeFi. And so let's go through them one at a time. So stablecoins should be clear to, if you're listening to this podcast or show. You may have to explain it to the uninitiated, but a stablecoin, like you should all know, is basically just the ability to use dollars or euros or yen as a cryptocurrency. And usually it's based upon something like Ethereum or something like Stellar. And you're basically just moving Ethereum contracts around or Stellar lumens around as opposed to dollars themselves. In the case of DeFi, as I said, the contracts can represent dollars on the Ethereum blockchain, but there's no dollars in reserve. You're actually holding more Ethereum to represent the value of the dollar, and the amount of Ethereum in the contracts will go up or down based upon the underlying value of ETH versus the dollar. And then the third application of Ethereum that I think is really interesting is this idea of issuing tokens like securities. Remember the ICO craze from a couple of years ago? Now we have STOs or security token offerings, whatever your acronym is. The ability to basically issue ownership in some underlying entity via smart contracts, whether it's an officially owned entity like a company or a stock company, or in the future an autonomous organization, is all very interesting to me. Those are the three kind of like killer apps, if you will, for Ethereum today. People have talked about NFTs and collectibles. That hasn't exploded yet, or hasn't really taken off yet, and I haven't seen any proof points. The technology seems sound for creating collectibles and NFTs or non-fungible tokens, but I haven't seen any proof points yet. But Abra is a huge supporter of Ethereum. A significant percentage of the tokens we support are actually ERC20 tokens, which are all based upon Ethereum. And so if you're using Myriad tokens in Abra, there's a very good chance that some of the tokens you're using are based upon Ethereum. And so we're very bullish on its future. It's very complementary to Bitcoin. I see Bitcoin as the hard money, and I see Ethereum as the smart contract platform, and both have a significant, huge role to play in the future of money and commerce. Let's see. So we're running up on our close. Let me see if we have any other questions here. This has been fantastic. So keep the questions coming. We can even take some of this offline later, and I'll follow up on Twitter. Let's see if there's any other questions. There are, but I think we've covered a bunch of them. I don't want to repeat all the questions. So let me see what else we have. And so I'm getting feedback that we're getting some echo here. So let me try reducing the gain on this. And then we'll play with it for the next episode. As I said, you all are helping us kind of work out the kinks in this. And so I really appreciate your patience with that. Yes, I have one more question here. Let me just make sure I process this right. So Abra product. So you launched support for tokens, but I can't easily buy those tokens here in Germany. When will I be able to use my account? So my bank account to buy tokens here in Germany. Good question. So as I mentioned before, way at the top of my priority list is adding new country support for local banks, and we're working hard on that. So you can use your credit card today. The fees for that are higher, obviously, than using your bank account. But I will tell you that high quality SEPA support for Europe, space support for Mexico, global wires are all at the top of my list for things that I'm focused on. And I hope to get those things to you as quickly as possible. And so let's see. I think I'm gonna. Well, okay. What's next for Abra? So that's a hard one to answer. I'll end with that by saying we've been sheltered in place as a company for I think 15 weeks now. We have people all over the world, not just here in the Bay Area. I'm in Los Gatos right now, but we have people all over the Bay Area, San Francisco, other countries. We haven't missed a beat in terms of product delivery. I'm really grateful for the efforts of the Abra team. We have a lot of people with small children at home. They've managed to get their work done and have just executed amazingly well during this whole shelter in place and craziness going on. So I'm extremely grateful for that. And I think that our roadmap is awesome. So June is going to be a really good month for us. We've got some exciting plans. We actually had a very good May. Ironically, with all the craziness going on, we have a lot of usage in our app. We had one of our best months ever. And so people are continuing to support us. We have a lot of loyal users at Abra. And we have a fantastic roadmap for the app for the rest of this year, particularly in the banking space. And so I'm excited about that. I can't give it all away now, except to say you're going to see a lot of exciting new banking-oriented features coming to Abra. Any chance overseas users will get to purchase equities and ETFs again? So not in the short term. It's something that we might consider doing again in the future if we can work out the legal issues. We grossly underestimated the complexities of managing that from a legal perspective. And so if we can figure out a way to do it that works for international users without interfering with U.S. rules and regulations, I'd love to do it, but that remains a wish right now. Please petition your local government and regulators, and feel free to write to the SEC if you don't agree. But that's where we're at with that right now. And as a startup, we have to pick and choose our battles, and dealing with the regulatory overhead of dealing with purchases of U.S. stocks and equities outside the U.S. is a little too complex for where we're at right now. But we hope to get back to it in the future because there seems to be significant demand. Okay, so look, we're right at 10 a.m. Pacific. This has been fantastic. As I said, my goal with Money Talks is to bring you a no BS, simple, open, honest, transparent perspective on all things money, all things crypto. Keep the questions coming. Send me questions via Twitter or DM or email. We set up an email. I think it's hello@abra.com. And we'll get to those questions every week. And we'll look forward to making this a regular show. And actually, we're going to have some guests on as well. Some well-known folks in the financial space are going to come on and talk to us and give us their perspective on investing, money, cryptocurrencies, the craziness going on, maybe the 2020 election, how it relates to crypto and investing. And I'll take some notes and learn a few things for myself and how to invest my own money. So thank you so much for joining. Keep the questions coming. Thank you for the support for Abra. And yeah, have a great, safe weekend. And give someone a hug today. It's crazy times, and I'm sure everyone could use it. Stay safe, everyone, and we'll see you next week on Money Talks. Take care.